gentlemen. My name is Monica Smithson, and I would like to thank you on behalf of Divine Home for joining us this morning. Can I take just a few minutes just to introduce us? For those of you who don't know who we are Divine Home Real Estate Agency. We have been established since 2009. Currently we have various offices across the Algarve. We also have an office in Mértola in the Alentejo, on the Silver Coast, and an office in the Netherlands. Today we are joined by my colleagues from the São Brás and Moncarapacho team, who I will briefly introduce. So, in São Brás we have Joanna. Hi. Wave, Joanna. We also have Tanya, also at the back. And then from the Moncarapacho office we have Tila, Jan, and Pedro. Okay. Also with us today we have our marketeer, Caterina, who without her none of this would have been possible. We also have with us our colleague from the Lole office, Vitor, at the back there. And we have a special guest appearance, an unexpected appearance. And all the way from the Netherlands is our CEO, Chantal, who's standing there. So, Team Divine Home, no pressure guys, okay? Okay, so my colleagues and I are here to answer any questions that you may have regarding the real estate process in Portugal. Whether you have a property to sell, whether you just want to discuss the process, if you would like a valuation, or just have a chat with us about the current market. We are all here happy to answer any questions, so please feel free to approach either one of us at the end of the presentation. For now, I would like to introduce our two very special guests this morning, our two experts who are going to give you some really valuable information on capital gains. After their presentation, there will be a few moments for questions and answers, and followed again by further refreshments and some more coffee and conversations, okay? So please welcome from I&A Consulting, Doutora Lawyer Inês Fernandes, and legal consultant Agnes Schutten. Before I give the floor to the ladies, I'd also like to give special thanks to our photographer for the day, Bart, who has had to step in last minute to save us. Thank you, Bart. Ladies.
Good morning, once again, to the people that I didn't talk outside. Hello, nice to meet you all. Welcome to this lovely coffee morning, which is always a good thing. We are very pleased and happy to be here today. And special thanks to Divine team for inviting us and trusting us with this presentation. It has been a true pleasure to work with you, so thank you once again for this invitation. As Monica said, I am Inês. It's a very Portuguese name, but it's easy to spell, it's not that bad. We are a Portugal-based legal team, so I do the Portuguese side, and this is my colleague.
International side. My name is Agnes Hageman-Schouten. I'm a legal counsel and I'm originally from the Netherlands.
We do focus on real estate life cycle, let's say. We do it from the beginning to the end and everything in between. We do also advise our clients not only on the real estate part, but everything related to all legal matters when you decide to or move or be here in Portugal. This visa questions, rentals, the famous AL. So we do everything, a little bit of everything, like we used to say in Portugal. Today we will be talking about capital gains tax, as you know, more focus on the real estate Algarve reality. We know for a fact that it is a very important topic, and most often it's very decisive. It has major impact on someone's life, as we all know. But it can be quickly very technical and therefore becoming overwhelming and scary, because of that scary. So today, and because of the time that we have, we will not get into technical concepts or technical explanations. We want you just to give you the key concepts that we think are important for you as property owners, currently owners or future owners, if you want to buy, and give you a practical overview of this topic. By the end of today, we just want you to know what capital gains are, when to do apply, how they are calculated, the key exemptions and deductions, and mention a few common pitfalls and common risks to avoid.
So, with that being said, let's dive straight into it. What are capital gains? So, when you sell an asset in Portugal, which can be a property or something else, shares, we will mainly focus on property for the purpose of this presentation, you gain a profit, money in your pocket. Is the profit the same as the taxable gain? No. It may differ. Why? From the profit there is a calculation to be made. After that calculation, which we will explain in a little bit, you have an amount which is the taxable gain. And the purpose of this presentation is to explain to you how we get there. So when do they apply? They are triggered at the moment of sale. That's not signing the CPCV, the preliminary contract. It's when you sign at the deed and you sell your property. Then capital gain taxes become applicable. For individuals, so private people, not companies, they are declared in the following tax year. So you sell your property in 2025, you declare the income, the capital gain, in 2026 with your IRS declaration. For companies, this is different. If a company holds an asset and sells the asset, they have to make a declaration within 30 days. And soon thereafter, they will have to pay the capital gains. An important notice. If you hire a lawyer when you sell your property as an individual, there is a common practice in Portugal. It's not an obligation, but it happens frequently, that the lawyer that represents you at the deed retains the amount of capital gains that you need to pay the year after. Why? There's two reasons. Basically, it helps you to be compliant. What is the amount, when do I need to pay it, how do I have to register and declare it. That can be done by the lawyer because he or she holds the amount on their client account, and also because there is a liability. The tax authorities in Portugal want the capital gains to be paid, right? So there is a responsibility on the part of the lawyer that when they have that money on their client account, that they do actually pay that the next year. So the lawyer becomes professionally liable as well. It's good to know this because although it's not your money, it's a capital gain that you need to pay, it will not move to your bank account in that occasion. It will be paid by the lawyer on your behalf.
Okay, so now that Agnes explained what are capital gains and when we do apply, let's now get to how are capital gains calculated. Most people might think wrongly that it's just the difference between the sale price and the purchase price. Let me tell you, it's not. There is a structured calculation. We start with the sale price, and then we go to the deductions, and that's where it becomes structured. We have two types of deductions. We have the adjusted acquisition value. Why is it adjusted? If you hold the property for at least 24 months prior to the sale, you can benefit from the inflation corrections. In Portuguese, it's called coeficiente da moeda, meaning that you bought a property in 2005, the property has a different value now, that amount that you paid has a different value now, and that value will be the one used as a reference by the tax authorities. The second deduction would be the deductible costs. I will tell you immediately after what are those. Final result, taxable gain. This is the amount that tax authorities will then tax you on. So this is the capital gain, this is the taxable amount. Like I said, deductible costs. This is very, very important, not only because the impact that they have on your capital gains, but mostly because most of the times they are either misunderstood or not applied correctly, and you don't take the best out of it, the best they can give you. We have different categories. The first one is the acquisition and sale, but we'll get there. The purchase taxes that you paid on the time when you bought it, the property. You paid IMT, it's the transfer tax, and then you paid stamp duty. Those are taxes paid upon acquisition. Also upon acquisition, you paid the notary, where you held the deed, and then you paid the registration to the land registry office in Portugal to put the property in your name. Upon sale, you also have costs. Namely, if you decide, which is very common, that you decide to put your house up for sale with an agent, let's say you hire Divine Home Services, which you should do. Their commissions can be used as a deductible cost for capital gains purpose. One small note, and just a curious fact, most of you might think that the legal fees, you hire a lawyer, we invoice you, that can be a deductible cost. Unfortunately, it's not that black and white. Can be used for companies, it's not admissible for individuals. If you're selling your company, if you're selling your property that is owned by your company, you hire us, hopefully, and we invoice you. You can use that as deductible costs. If the property is held in your personal name, unfortunately our invoice will not be used as deductible costs. And most important one, the renovations and improvements. You all may be aware that if you make alterations and if you make works on your property, then later on you can indeed deduct those as investment in your property and reduce the capital gain amount. But the thing is, this is not just that simple. It is kind of tricky. And why is that? There are some costs that can be accepted, not all, regarding renovations and improvements, not all. And even those need to comply with certain formalities and some certain rules. Sorry. First of all, the first requirement is that the proper invoice. What is that? What is this? So, if you make cash payments but you don't get the invoice, you can't claim the money or use it to deduct on your capital gain. So always make sure that you have an invoice. That invoice must be in the name of the owner of the property with your Portuguese fiscal number on it. It's essential. It cannot be in the name of your brother or your sister. No, it has to be in the name of the property owner. That invoice also must contain a description of the works that have been carried out. And finally, the VAT application needs to be according to the Portuguese law. We have different rates in VAT, we leave that to the buildings and everything, people who does that, but it's very important that is the correct VAT applied. If those are not met, even if you have everything but they're not correct, you cannot use them as deductible costs. What are those works that you can do? We are not talking about simple things. We are talking about structural alterations or improvements that indeed had value to the property. Let's say you add a deck, you add a wall, you extend, installation of solar panels, which is being used quite a lot for the past few years and hopefully they will continue. So all those major and more big works are the ones that are accepted for deductible costs. And final request, please note that only the invoices properly issued within the prior 12 years to the sale are the ones to be accepted. Meaning 12 years prior to the sale, you can use those costs.
Okay, now we want to know to whom and how do these apply, capital gain tax. So as we've already explained, an asset can be sold by a company or by an individual. We, for the purpose of this presentation, mainly focus on individuals. So residents and non-residents can own property in Portugal, sell it, and thus be subject to capital gain tax. After we've done the calculation, as Ines has explained, you do the deductions and you get an amount of capital gain. 50% of that gain is taxable. When you are an individual and not a company, as explained before, this is added to the annual income and the declaration you make the year after you sell it, and then a progressive tax rate applies. The progressive tax rate varies between 14.5% and 48%. Small note to make. There used to be a difference in treatment between residents and non-residents. So, prior to 1st of January 2023, non-residents were treated differently. How? They paid over the whole capital gain 28% flat rate. So, EU regulations dictated that was discriminatory, and so it had to be leveled. Now everybody is treated the same. So, of your calculation, you have a capital gain tax amount, 50% is taxable, and it's added to the annual income the year after you sell your asset. Okay? Now, in case you have dozed off, it's time to wake up. Because this is what we all want to know. What are the exemptions and what are the reductions? How can I lower the amount of my capital gains to be paid? So the first scheme is the reinvestment in primary residence scheme. How does it work? You make sure that the assets, the property that you sell, is in your name as a primary residence, meaning it is your tax registered residence before you sell it. And then when you sell it, you reinvest in another primary home within the EU or in Portugal. There are some rules, obviously. You have to be a primary resident of the property that you sell within 12 months prior to you selling it. And you have to reinvest within 36 months after you sold your property in a new primary residence. The question that we received that is asked numerous times is, well, what if I don't want to invest the full amount? Because if you invest the full amount of the profit that you receive from your sale, you are exempt. You pay 0. Pretty interesting, right? If you invest a partial amount, because you want to keep a certain amount for yourself, it is still possible to get a reduction. Without going too much into detail it is good for you to know that is calculated pro rata, proportionally. So
it's only for a resident, eh?
No. Residents and non-residents are treated the same. As long as you comply.
Yeah. No, but you have to be a primary resident, so it is your primary residence.
Ah, yes, exactly.
It is your tax.
Yes, correct. Yes. For the use of this reduction and exemption, yes.
You have to be, it has to be your tax residence.
Yeah.
Exactly. Yeah. So if you then reinvest a partial amount, the tax authorities will also consider that partial amount. So how does it work? You still have the 50% of taxable proportion that will have to be paid, but you do not pay over the part that you reinvested in another primary home. You pay it over the part that is not reinvested. So it still might be an interesting option to make use of these exemptions and reductions this way. Okay. Then there are a few special regimes that we don't have the time to get into those, but we want you to be aware of them because they do exist and they might be applicable to your personal situation. So there is an exemption regime for retirees or individuals over 65 years old. There is an exemption regime for properties acquired before the 1st of January 1989. Please note that this is only applied to individuals and not if your property is held by a company. It doesn't work. Because there are separate corporate tax and reinvestment regimes, plural, if the property is sold by a company. So good to know that these exist and might be worth asking your accountant or your tax advisor, is this maybe applicable to us or to me, and how does it work?
Would NHR 2 also be part of such an exemption?
Is it okay maybe if we answer the questions? Is it okay that we answer it after the hold the thought? Okay.
Okay, so we have discussed the exemptions and reductions. We decided to bring 2 topics because we are very often asked about it and they do have major impact on your CGT. The first one is the inheritance and gifts and the impacts that they have on ALs. We do have a few clients that they inherited a house or they were gifted a house and then they end up with a major capital gain tax that we were not expecting. Why is that? Like we said in the beginning, the capital gains calculation, the structure calculation starts with the sale price and then we go to the purchase price. Well, if you inherited a house or you were gifted a house, there is no purchase price. You didn't pay anything for that. It was just gifted to you. So how do we go from there, right? If there's no purchase price, how do I proceed with the structure calculation? How do I get my capital gain from that? The tax authorities use the acquisition value would be the tax value, VPT. This is the patrimonial value. It states in the caderneta predial, the tax certificate that you have for your property. What is the problem about that? The problem is that, unfortunately, in Portugal, the VPTs are 99% of the times way lower than the market value. And I am not even, exactly. If you have a house and your market house is 700,000, market value house is 700,000, don't find it weird that your VPT is 100,000. It's not weird. Unfortunately, it happens. What is the problem here, obviously, jokes aside? Impacts the final capital gain, because you will have a major profit from your sale. We can use the deductions, the deductible costs and all of that. If you're a resident, primary resident, you can still use the exemption, that's fine. But the taxable gain that you'll get, it will be indeed higher, and you will be highly exposed, the tax exposed. So that's why we always state people, please be aware of this, have this in mind when you decide to sell. There's not much we can do because we can't change the VPT, but it's good to have in mind that might be a consequence from it. The other major topic that we are asked quite a lot is the AL, alojamento local. Why is this the thing? We all know that even if you're a resident or not, if it's very good to make profit out of property, right? That's one of the reasons that people invest in real estate. So it's normal and quite used actually that you rent out your property and you get profit from it. And we all know it's profitable to have properties. However, they can also be a major tax exposure. Why is that? Because the property is then considered linked to a business activity. The consequence is that different tax rules will apply to the capital gains. So you will end up in a regime that is more severe, because 95% of your capital gain is taxed, comparing to the regime I was explaining, which is the 50%. So the taxation just here, just this point, is already severely higher. The second thing is that no deductions are possible. You have no access to deductible costs if you end up in the regime which is called category B. It has to do with the source of income and how they are treated and seen by the tax authorities. The third one is the no reinvestment exemption is possible, because if you're renting it out your property, it's not your first residence, it's not your primary home, you cannot use the exemption. But there's always ways. Good news is there's always ways. The point is plan ahead. That's the plan. I don't want to fall under the AL CGT regime, capital gains tax regime. How do I do that? There's ways that we can mitigate or reduce this. First of all, and this is the safest rule, the one that we always advise to our clients, is 3 years before you intend to sell, please make sure that your AL license is terminated. But you have to be careful, because it's two ways. You have to cancel the AL license, which is done at the Portugal Turismo de Portugal, Portugal Tourism Authority, and terminate the activity at the tax department. Both of them need to be done. If you comply with this, if you make sure that 3 years, have this number in mind, 3 years before I intend to sell, I need to cancel my AL. That way I will fall off the severe regime of category B and I end up in a normal regime of the CGT. And then you have two scenarios that will always be favorable. Scenario A, you comply with this, you cancel the AL in the two versions, and you put it as your fiscal residence. Deductible costs are applied, regime of the 50%, and you can use of the exemption. Even if you don't put it as your fiscal residence, you still have the 50% regime applied and the deductible costs. So it will always be a favorable regime. One other option, we know that it happens a lot and needs to be carefully analyzed situation by situation. It would be if you have a management company that manages your house, they can have all the liability and be responsible for all the AL questions, because they will be the holders of the license. That way, they receive the income from the AL, which is the income that is be treated as category B, severe regime, and you are not. So you can get away from the severe regime this way. It is a possibility, this thing, but again, depends on how it's structured, the relationship and legal relationship that you have with the management company, and it requires a detailed analysis.
Yeah, and as you can understand, this is also a scheme that people might want to use to avoid having to pay taxes, so it has to be compliant with the actual situation.
So the key is plan ahead. Make sure that you have the information on your side, because there are ways to mitigate. Inheritance and gifts, for example, it might be difficult to mitigate and reduce the impact, but on here, if you have the information, if you know how to use it, and you are well advised, you can always mitigate or reduce the impacts.
Okay, so with that summary being given, it goes without saying that there are now common pitfalls that hopefully you have been able to identify, which is you miss the opportunity of having a good administration where all your invoices, all the money that you've reinvested in your house, adding value to your property, is not correctly administrated. It has the wrong NIF, it's not the name of the owner. So if you know that and you have a good administration and you can bring that to your tax advisor or accountant when you wish to sell, you have a way better understanding of what you can deduct. If there's no pre-sale tax planning, you can be you can walk into unexpected tax liabilities, and I think that's the biggest giveaway from what we wanted to share with you during this presentation is think ahead. Ask the right questions, do that with the help of a lawyer, or do that with the help of a tax advisor, so that you are not surprised that at the time of sale there is this huge taxable gain to be paid that might have been either prevented or minimized with all these examples that we just gave. So, what could be our role in this? Well, we can help you with the whole support when you buy a house or when you sell a house. So we do the due diligence, we prepare the contracts, we check if everything is in order. If things are not in order, we help you to figure out, is this a big liability? Maybe you have to reconsider the sale price because you gain a little bit of liability, or maybe we can prevent it and find a solution together with the seller. But we can also coordinate with tax advisors, because we know what questions you could ask. We don't always have the answers because we ourselves are not tax advisors, but working together with a tax lawyer or an accountant can help make the actual calculations and see where you end up when you sell your property. Basically, all this to say that we ensure compliance when you buy a house, when you sell a house, and everything in between. And also help optimize the outcomes as much as we can, because we all have to pay taxes, but if we can pay less, that would be the best outcome for everyone, obviously. That concludes our presentation. Thank you very much for taking the time to listen to us. Again, thank you Divine for inviting us. We have some time.
Thank you, ladies, for your time. Everybody else, whenever you're okay, you're free to go outside and have some more refreshments and carry on with your questions to our experts and to the team. Please don't leave before you say goodbye to us, because we have a little goodie bag to give you all so that you can remember us by. Thank you all very much for coming.